Welcome to this explainer. Okay, today we're stepping right onto the high-stakes, hyper-competitive trading floor of modern energy markets. But, the trading floor we're looking at today doesn't look anything like those chaotic, shouting pits of Wall Street past. Nope, it's entirely silent, operating in the digital ether and moving at speeds completely invisible to the human eye. We are analyzing a massive paradigm shift happening right now in energy trading, specifically the transition from manual trading desks to fully automated AI-driven algorithmic dispatch. If you manage assets, trade energy, or build the software that powers our grid, the rules of the game have fundamentally changed.
So, this brings us to a rather uncomfortable question, but one we absolutely have to ask right up front. Are human desks still calling the shots? This direct challenge from our source material cuts right to the heart of the status quo in modern asset management. In an era where data literally dictates dominance, relying on human reflexes to execute trades in fast-cycling energy markets, well, it's an incredibly risky proposition. The urgency here cannot be overstated. We're looking at a landscape where traditional methods of dispatching energy assets are rapidly becoming obsolete, and the divide between winners and losers is being drawn by lines of code.
Okay, let's dive into this. Section 1. The end of manual trading.
First things first, to make sure we're all perfectly aligned on the specific market dynamics, let's establish the core asset, BESS. That stands for Utility-Scale Battery Energy Storage Systems. These grid-connected infrastructure projects provide massive flexibility to store and discharge power. But here's the kicker. Their true return on investment is entirely dictated by exactly how intelligently and quickly they're dispatched. And that brings us to a very serious bottom-line reality. Manual trading equals leaving money on the table. Listen, this isn't just some theoretical loss, it's a very real financial liability. The physical limitations of human reaction times are becoming a severe bottleneck. Just think about the chain of events for a second. A human operator has to see a price signal, interpret that data, make a decision, and then physically execute the command to dispatch the battery. In today's fast-cycling markets, that multi-second delay is an absolute eternity. And in that eternity, your financial opportunity completely vanishes.
Moving fast, Section 2. Millisecond markets outpace human reflexes.
Now, what's really interesting about this slide is that the defining metric for success or failure today is measured in milliseconds. In these fast-moving intraday and balancing power markets, spot prices swing and clear in mere fractions of a second. Think about this. A human blinking takes about 300 milliseconds. By the time an operator even realizes a lucrative price spike has hit the grid, the market is already cleared, the price is settled, and boom, the opportunity is completely gone. Human reflexes simply cannot compete in a millisecond environment. So, the absolutely crucial point here is understanding the stark contrast. On one side, we've got reactive operator oversight. A human waiting for something to happen and then trying to react to it. It's inherently backward-looking and honestly, it's slow. On the other side, we have fully autonomous asset dispatch. We're talking about automated algorithms executing decisions based on vast data sets, instantly. The machine doesn't get tired, it doesn't get distracted, and most importantly, it never hesitates. It optimizes across multiple market revenue streams simultaneously and in real time, completely removing that sluggish human bottleneck from the execution chain.
Let's look at the direct bottom-line hits of sticking with that reactive human model. Without direct integration into modern market-clearing tools, BES owners are suffering two massive blows. First up, they're missing critical peak capture windows. These are those incredibly brief, wildly lucrative moments when power prices skyrocket. If you miss the window, well, you miss the revenue. Second, they are actually suffering from sluggish response penalties. Grid operators will financially penalize assets that are too slow to respond to dispatch signals. So being slow doesn't just mean you fail to make money, it literally means you are actively losing money.
Section 3. The AI and API advantage.
To survive, the manual desk is being entirely replaced by an AI and API advantage. That digital brain is tasked with a monumental job, optimizing multi-market revenue streams in real time. Modern energy markets aren't just one single auction anymore. They're this complex web of different services, frequency response, energy arbitrage, capacity markets, the whole shebang. An algorithmic system can simultaneously monitor all of these streams at once. And when you pair that algorithmic execution with predictive renewable forecasting, meaning the AI is actually anticipating when the wind will stop blowing or a cloud will cover the sun, you get a distinct automated competitive advantage that a human team could never, ever replicate.
Let's move to and see how this builds. Section 4. 3 Essential Infrastructure Strategies.
Knowing that manual trading is such a huge liability, here is the actionable blueprint. These are the three absolute pillars of modern energy trading infrastructure you've got to implement to stay competitive. First, AI-driven algorithmic dispatch. Your system must be capable of making its own trading decisions instantly based on market conditions. Second, predictable, renewable forecasting. The system has to look ahead, anticipating market volatility driven by weather and renewable output way before it happens. And third, absolutely critically, direct API integration. The battery system must be directly plugged into the predictive AI-driven market clearing tools. No human intermediary. The software has to talk directly to the market software to achieve those millisecond reaction times.
And this brilliantly illustrates the ultimate takeaway from our analysis today. Shifting from reactive operator oversight to fully autonomous asset dispatch is no longer an optional tech upgrade. It is the baseline requirement for commercial survival. I mean, wow, this isn't just a nice-to-have feature for a battery storage project anymore. It is the fundamental dividing line between a highly profitable asset and a stranded one. The market has evolved, and your technology absolutely must evolve with it.
Which leaves us with this final provocative thought to close out our explainer today. If you're an asset manager, an energy trader, or a software developer operating in this space, have your portfolios fully transitioned to automated algorithmic dispatch? Are human desks still calling the shots in fast-cycling markets? The millisecond clock is ticking. You really need to take a hard look at your infrastructure because in the modern energy market, if you aren't automated, you're already behind. Thank you so much for joining me and keep learning.